Hello, and welcome to Professional Insurance Program's presentation of Know the Law for Terminated Employees, Navigating COBRA and Wisconsin Continuation, a guide for employers. Thank you for joining us as we explore the key differences between these two health insurance continuation laws. Whether you're an employer, HR professional, or benefits administrator, understanding your responsibilities under COBRA and Wisconsin Continuation is essential. Today, we'll break it down in a simple and clear way so you can confidently manage coverage for employees who experience qualifying events. Let's get started by reviewing our agenda. Here's what we'll cover today: the difference between federal and state continuation laws, who is eligible for COBRA and Wisconsin continuation, the type of coverage offered under each law, employer notification requirements, the length of coverage and early termination rules, premium costs, and employer responsibilities. By the end of this session, you'll have a solid understanding of how these laws impact your business and employees. Both federal and state laws provide employees and dependents with the right to continue their health insurance coverage after losing eligibility under an employer or association plan. COBRA applies to employers with 20 or more employees and is regulated at the federal level. Wisconsin Continuation applies to most group health insurance policies covering Wisconsin residents, regardless of employer size. While both laws serve the same purpose, their requirements and coverage options differ. Let's dive into the specifics of each. COBRA is a federal law that allows employees, spouses, and dependents to continue their group health coverage when they lose eligibility due to certain events. Employers must notify affected individuals, and those who elect COBRA pay the full premium, plus an administrative fee. The coverage duration depends on the qualifying event, which we'll discuss shortly. Wisconsin's continuation law applies to most group health insurance policies issued in the state, regardless of employer size. Unlike COBRA, Wisconsin continuation only applies to medical and hospital coverage, not standalone dental, vision, or prescription drug policies. Additionally, employees who live outside of Wisconsin but work for a Wisconsin-based employer are eligible for continuation coverage under this law. Eligibility requirements differ under each law. Under COBRA, an individual must have been covered under the plan for at least 1 day before their coverage ends. Under Wisconsin continuation, an individual must have been covered for at least 3 consecutive months before they qualify for continuation coverage. One major difference between these two laws is the type of coverage they extend. COBRA allows continued access to all health benefits available to active employees and their dependents. Wisconsin continuation is limited to hospital and medical coverage. It does not apply to dental, vision, or prescription drug benefits if they are separate policies. Employers must provide timely notice when an employee becomes eligible for continuation coverage. Under COBRA, employers must notify eligible individuals within 14 days. Under Wisconsin continuation, the notice must be sent within 5 days. Timely compliance with these notice requirements is crucial to avoid penalties and ensure employees have the opportunity to continue their coverage. The length of continuation coverage varies depending on the qualifying event. For terminated employees and their dependents, both COBRA and Wisconsin continuation provide 18 months of coverage. For disabled employees, COBRA extends coverage to 29 months, while Wisconsin continuation remains at 18 months. For spouses or dependents due to death or divorce, COBRA allows 36 months, but Wisconsin continuation remains at 18 months. If a dependent ages out of coverage, COBRA allows 36 months, while Wisconsin continuation does not provide coverage in this scenario. Continuation coverage may end earlier than the maximum period if the individual fails to pay premiums. They move out of Wisconsin. This only applies under Wisconsin continuation. They become eligible for another group health plan. COBRA allows termination in this case if they are covered, but Wisconsin continuation only terminates coverage if the new plan is similar. Employers should be aware of these scenarios to properly manage terminations and ensure compliance. Both COBRA and Wisconsin continuation require individuals to pay the full cost of coverage, but the pricing differs slightly. COBRA allows employers to charge 102% of the premium. This includes an administrative fee. Wisconsin Continuation limits costs to 100% of the billed premium without an additional administrative fee. That brings us to the end of our session. We hope this presentation provided clarity on the differences between COBRA and Wisconsin Continuation. If you have any questions, need further assistance, or want to discuss how these laws impact your business, feel free to contact us. Professional Insurance Programs Benefits Team can be reached at 800-637-4676, info@profinsprog.com, or visit our website, insuranceformmembers.com. Thank you for joining us. Have a great day.